Leaders have pledged over 1 billion doses, either directly or through funding to COVAX.
China is pursuing a quite successful infrastructure policy. We cannot just stand by and watch.
You're going to see just straightforward dealing with China.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance, everyone. Early edition on Monday, the 14th of June. I'm Francine Lacqua here in London, and here's what's coming up on today's program. G7 reset. President Biden lays the groundwork for his global agenda as a weekend summit. Well, this week he meets with NATO, the EU, and President Putin. The UK's reopening is set for a delay. Prime Minister Johnson is extending the lockdown by an additional 4 weeks amid a surge in the highly transmissible Delta variant. And Elon Musk boosts Bitcoin with a tweet yet again. The Tesla chief executive says the company will accept the digital currency as payment again if miners clean up their act. So there's quite a lot going on this week, and it's only Monday. Remember that when you go for your first cup of coffee on this Monday morning. But let's get straight to our top market story with our Danny Berger. Hi, Danny. Great to have you back. So the Fed looming later this week. What does trading look like ahead of it?
Well, Francine, look, if you're a trader and you're waiting for that Wednesday meeting, we're in the middle of the summer. You have much of Asia off on holiday today. Volumes are just so light. It really feels like those summer doldrums have hit market participants really hard. Now, overall markets, we are seeing equities float higher this morning. We are seeing higher yields. But really, the trend for treasuries over the past week has been one of a short squeeze, of a treasury rally. The Fed does seem like it's done a pretty good job of convincing bond markets that they're going to be able to contain inflation expectations. So we're getting a little bit of a steeper curve as well this morning. And really, I think just on that lookout for Wednesday, the expectation is that we'll get that median dot plot increase for 2023. So, inflation continues to be the story, despite the fact that people don't want to make a lot of moves today, and volumes will likely continue to be pretty light.
Bitcoin, Danny, is definitely seeing some action over the weekend. And this is another Elon Musk tweet.
Yeah, definitely one asset that doesn't have the summer doldrums. And of course, if there are big moves in Bitcoin, there's going to be a corresponding tweet from Elon Musk, as we know too well, and probably much to the chagrin of Bitcoin fans. So this time he talks about the fact that Tesla might accept Bitcoin transactions yet again if they're able to get about 50% of Bitcoin mining done in a cleaner fashion. We're not too far off from that right now, actually. Estimates are anywhere from 30 to 45% of mining is done in a clean way. But at the end of the day, we are still very far here from the highs that Bitcoin set in April, about 40%. And this in itself might not be that significant, but really it's that sentiment change that Elon Musk dominates that we're looking for, Francine.
Our Danny Berger, thank you so much, Danny Berger. They're looking at all of the market moves. Now, G7 leaders take a strong stance against China's economic aspirations and human rights practices, but they stopped short of an outright condemnation of Beijing as President Biden seeks to build momentum for an international coalition to counter Chinese influence in the world.
You're going to see just straightforward dealing with China. I'm not looking for conflict. Where we can cooperate, we'll cooperate. Where we disagree, I'm going to state it frankly.
We definitely have to deal with the fact that China is pursuing a quite successful infrastructure policy. We cannot just stand by and watch.
There will be a need to contest China, particularly in the matters of human rights. And that's where all of us, as a G7 and partners, are aligned in ensuring that we are consistent and united in our approach on these issues.
We must cooperate with China, but we must also be frank about what we do not agree and do not accept. The U.S. president said that silence is complicity.
The G7 is not a club which is hostile to China. It is an international competitor from whom we expect the full respect of all the rules we collectively and voluntarily submitted ourselves to.
Well, joining us now is Bloomberg's executive editor for international government, who's been working over the weekend, Roz Matheson. Roz, thank you so much for joining us. So how united is this front against China?
Well, there's certainly a level of high concern amongst many countries about China's growing assertiveness, both economically and strategically, and a sort of a view that there needs to be a concerted approach to managing that. Where the differences come in is how to manage that and how strongly to do so. Certainly a level of caution about pushing too strongly because many countries have a very strong economic imperative to deal with China, and equally awareness about being seen as being part of an anti-China cabal that's led by the US. Of course, even with Donald Trump out of the picture, there is that level of hesitancy about automatically following the US leadership on certain issues around the world. And so we saw quite a robust debate behind the scenes here at Cornwall at the G7 about how to calibrate that response, and some pushback certainly from the US angle. We saw that particularly from Germany and Italy.
So, Roz, what else did they agree on? And actually, how much, did Brexit overshadow all of the proceedings?
Well, Brexit did creep in probably a bit more than the host, Boris Johnson, would have liked. There was a lot of to and fro between him and the European leaders here about that. Certainly an odd dispute with the French leader about sausages in France versus meat from Northern Ireland and what actually constitutes a part of the UK. And it sort of descended a bit into that, and that sort of overshadowed some of Boris Johnson's efforts to host the summit. But equally, given it was the first time they'd all met in person, many of them for a year or two, and the first fully fledged G7 for a while, there was an overarching desire to sort of present it as a reset, a restart, leaders able to talk again and unite on certain issues beyond Brexit, particularly again on those geopolitical issues and on things like climate change.
Roz, thanks so much. Bloomberg's executive editor for international government there, Roz Matheson. Now, NATO leaders will also meet today in Brussels. This will be Joe Biden's first trip to Brussels as U.S. president. His presence comes as a relief to many, not least NATO Secretary General Stoltenberg, who said this morning that relations with Russia are at a particularly low point.
Our relationship with Russia is at its lowest point since the end of the Cold War. This is due to Russia's aggressive actions. I am confident that the NATO leaders will confirm our dual-track approach to Russia, strong defense combined with dialogue.
Well, joining us with more is our Brussels reporter, Maria Tadeo. So, Maria, exactly what will be on the agenda? And are they talking about the new NATO? We were having a debate in the newsroom about what actually NATO has accomplished thus far.
Well, yeah, Francine, and at the G7, as you just mentioned, it was all about China. The NATO summit, it will be all about Russia. And, in terms of what's top of the agenda, that there's a real transition happening in the themes. When President Trump used to come to a NATO summit, all he cared about, and this was a real fixation from Donald Trump, was that 2% defense spending. This was the one thing that he kept repeating time and time and again. Interestingly, this time, we haven't really heard anything around it. This is not the line that the United States is pursuing. Nonetheless, there is a lot going on with Russia. The southern European countries, the eastern European countries uniting on that. A lot of nervousness when you speak to the Polish, the Lithuanians, also the Ukrainians, and President Biden making it clear that there is, quote, a sacred duty that the United States has when it comes to defending NATO and Article 5. Now, all of this is happening, Francine, and you can see the sequence of this before that meeting on Wednesday between President Biden and Vladimir Putin. What the U.S. is aiming to get out of this meeting today is a united front from all of the NATO countries, the Western liberal democracies, against Russia's aggression, so he can come into that meeting with leverage and be tough, quote unquote, on Vladimir Putin.
Maria, thanks so much. I'm Maria Tadeo there in Brussels for the NATO summit. Now, coming up on the program, cryptocurrencies get a boost from Elon Musk's latest tweet about Bitcoin. We'll discuss that with HSBC FX strategist Dominic Bunning. Then, after 12 years in power, Benjamin Netanyahu is unseated as Israel's prime minister. What next for the fragile coalition succeeding him? This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the group of 7 blockbuster pledges of a billion vaccine doses fell short of expectations this weekend, as leaders included previously announced vaccine donations in their total. Now, with only 613 million new doses were promised by the G7, the summit risk being defined by falling short. Well, Europe's leadership were content that the summit itself did not dissolve into hostilities. France's Emmanuel Macron welcomed having the U.S. president part of the club and very willing to cooperate. Well, joining us now is Dominic Bunning. He is HSBC Senior FX Strategist. Dominic, thank you so much for joining us. I think a lot of the focus was definitely on China and the fact that there seemed to be a united front in how to deal with China in terms of economic policies, but also human rights abuses. What does that mean for euro, dollar, and yuan?
Yeah, no, I don't think, to be honest, that the geopolitics is going to have a massively strong impact on the currencies. I think deep down we still see the economics as being what's important. And I think, to some degree, you're seeing in China a little bit of a slowing and a little bit of an operation in terms of trying to engineer a little bit of currency weakness. So we still see over the course of the rest of the year dollar renminbi pushing slightly higher. And I think the same's true in terms of where the euro goes. A lot of it does come down to that economic backdrop. Is it possible that the ECB can be much more hawkish or turn even at all hawkish? Well, it's pretty tricky. So it's hard to see the euro going much, much higher as well. So, all of that's obviously going on. But to be honest, I think the big event this week is the Fed. I don't think many currency traders are looking at G7 and going, wow, that was the big event. I think we're all looking at the Fed tapering, et cetera, et cetera.
Yeah, I mean, the Fed is obviously the big one. I just wonder how much of the tapering is already priced in a lot of the currencies.
Yeah, I do think there's an element of that being the case. It's been discussed in some respects, certainly in markets for some time. You've seen a bit of a shift from some of the members of the FOMC. And I think there's an element of that. But in the currency world, what's been interesting is that the dollar has generally remained pretty soft over the last few months. Obviously, Q1 was quite a good quarter for the dollar, but Q2 we've seen a lot of those gains reverse, and I think the market from an FX perspective is pretty sanguine about those risks, and actually that's often when these kind of announcements can have an impact. So I would think that actually with positioning where it is, the actual chance that tapering discussion, even if it starts to be brought up in very loose terms, possibly the shifting forward of the rate hike dots, for example, those sorts of things, they may bring a bit of short-term positivity to the dollar if we get that coming out on this week.
So, I mean, I guess what market players really want to know is whether, the Fed or when the Fed starts discussions about winding down purchases. When do you think that will be, Dominic?
Look, I mean, I think they're already having some discussions about it, and they'll probably let that on this meeting. But in terms of the very specifics of that discussion, that's going to be waiting, I think, until really Q3, probably the September meeting. So if you were sort of asked for the timeline, I'd sort of say, look, they're discussing it in some respects now. They're only going to give us any detail of how that process will play out in September. And then in December, we should have that tapering announcement. So that's really how I see the timeline. It's still pretty drawn out. And that's why in our base case, we do still see a little bit of dollar weakness against most currencies. But I don't think there's room for a massive dollar weakening. I think it's pretty marginal. And then come the end of the year, when that tapering starts, when all that discussion becomes a lot more pertinent, then I think the dollar will start to gain again.
So, Dominic, is today the right time, for example, to take advantage maybe of some havens like yen?
Yeah, look, we still like the yen. And I do think there's an element of potential risk aversion coming through. I mean, I think the currency where I still think there's more downside, and it's been moving the other way. But I think in sterling, what you've got is a currency story which is incredibly optimistic, very positive from most market players. But I think all the good news is priced in. So if you were to ask me where potentially you get a bit more bang for your buck in terms of dollar doing quite well, it might be against sterling. I think dollar yen is kind of a bit of a range at the moment because it sort of benefits from the risk off element, but it potentially gets hurt if you do have a bit of a push higher in US yields. So it's a bit of a balance there. I would say, if you wanted to buy the dollar, I'd favor buying it against sterling. I think that's probably the better risk reward at this point.
Dominic, thanks so much. Dominic Bunning there of HSBC stays with us. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Benjamin Netanyahu's record run as Israeli Prime Minister has ended. Opposition parties united in a bid to end more than 2 years of political turmoil. The country's parliament has cleared Jewish nationalist Naftali Bennett and centrist Yair Lapid to take over in a power-sharing arrangement, while Netanyahu is now vulnerable to pending graft charges. Passing a budget will be top of the new coalition's agenda. Here in the UK today, Prime Minister Boris Johnson looks set to announce that he will not lift England's pandemic curbs on June the 21st. Johnson and senior ministers have signed off on a 4-week delay, according to reports in the press. This comes as the UK reported more than 7,000 new cases yesterday. Now, that was for a 5th straight day amid a surge in infections linked to the Delta variant. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, coming up, cryptocurrencies get a boost from Elon Musk's latest tweet about Bitcoin. We'll discuss the intersection between digital and fiat currencies with Dominic Bunning. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Bitcoin jumped 8%, taking the digital currency above $39,000 following the latest commentary from Elon Musk. In a tweet, the Tesla chief executive said that his company would resume transactions with Bitcoin when mining is done with more clean energy. Now, he also revealed that Tesla sold just 10% of its Bitcoin holdings in the last quarter to prove that the tokens could be liquidated easily without moving the market. Well, we're back with Dominic Bunning of HSBC. Dominic, I know it's extremely difficult to predict prices for Bitcoin or any cryptocurrency, so I won't ask you that. But at the crossroads between crypto and fiat currencies, does this blend? What does this become?
Yeah, I think it's such early days at the moment. There have been times when it looks like crypto has been driving the rest of the FX market, but the work we've done and when we looked at it in more detail, really it shows very, very little relationship. And I think today's a really good example of that. When you get a currency, or if you want to call it a currency, an asset being moved 8% on a tweet, look what's happened in the rest of FX. Nothing's really moved. So I don't think we're really at that intersection yet. I think that, currencies as we know them, traditional currencies, remain dominated by those fundamental drivers, and they're not going to be impacted really by what a single person tweets. But I do think potentially it's something we need to consider as we go forward. And obviously central banks are interested in what's happening in the crypto and digital currency space. So it's something that's going to become more important. But right here, right now, it's probably not going to drive fiat currencies all that much, unfortunately.
So, Dominic, what does the crypto world evolve into, and what kind of timeline are you looking at?
Well, look, I think it's so open. This is the interesting thing, and without getting into the debate about it, there are clearly pros and cons of many different cryptocurrencies for various reasons, whether it's Bitcoin or Ethereum or Ripple or Dogecoin, for example. There's so many out there that actually seeing how that evolves and whether you get one dominant currency or whether one dominant ecosystem develops, that's still such early days. What I really think is going to be crucial from a broader perspective is how central banks manage this digitization process and how they design their digital currencies, because we are going to get central bank digital only currencies, and whether they manage those in a way that means that individuals like you and I can get a central bank deposit or not, for example, or how that's managed, that could have ripples across the whole of the banking system, across the whole of the financial system. So that's going to be a process that has to be very carefully managed, and we'll start to see that take place over the next few years. But that, I think, is really where the interest will lie for broader markets.
Dominic, I also wanted to ask you about, I know you mentioned actually sterling, but how do you look at, I don't know whether it's Brexit or just, something else that moves sterling at the moment, but is it range bound or could it actually move quite significantly from here until end of the year?
Well, look, I mean, it has been very, very range bound for a few weeks now, clearly. But I think what that really shows you is almost this trend exhaustion. Everyone's loved the pound for a good few months, bar us. And, we've been wrong, so we'll hold our hands up to that. But I do think at this point that sterling downside looks a lot more likely and could be a lot more aggressive than the move to the upside. And the reason I say that is that a lot of the good news is priced in. I mean, when you look at how UK rates have moved relative to the currency moves a lot further, a lot faster. That's also true from an equity flow perspective. The currency's moved ahead of any potential flows. So all of that good news about the UK reopening and the macro story is priced into the currency. And I think, therefore, the room for disappointment is much greater than the room for overachievement, much like England's football team potentially at this year's Euros. As is always the case, there'll be a lot of optimism going in, but I think actually the risk is to the downside if we don't get that full expectation of good economic news coming through. The pound does look vulnerable because everyone's long and not many people see it going down.
Yeah. Dominic, I love the football analogy. I'm quite long on, England this year, more than Italy. Dominic Bumming there of HSBC. This is Bloomberg. G7 reset. President Biden lays the groundwork for his global agenda as at the weekend's summit. Now, this week he meets with NATO, the EU, and President Putin. The UK's reopening is set for a delay. Prime Minister Johnson is set to extend the lockdown by an additional 4 weeks amid a surge in the highly transmissible Delta variant. And after 12 years in power, Benjamin Netanyahu is unseated as Prime Minister of Israel, but the fragile coalition succeeding him will it be able to maintain their alliance? Well, good morning, everyone. I'm Francine Lacqua in London. Welcome to Bloomberg Surveillance Early Edition on Monday, the 14th of June. So G7 leaders take a strong stance against China's economic aspirations and human rights practices, but they stopped short of an outright condemnation of Beijing as President Biden seeks to build momentum for an international coalition to counter Chinese influence in the world.
You're going to see just straightforward dealing with China. I'm not looking for conflict. Where we can cooperate, we'll cooperate. Where we disagree, I'm going to state it frankly.
We definitely have to deal with the fact that China is pursuing a quite successful infrastructure policy. We cannot just stand by and watch.
There will be a need to contest China, particularly in the matters of human rights. And that's where all of us, as a G7 and partners, are aligned in ensuring that we are consistent and united in our approach on these issues.
We must cooperate with China, but we must also be frank about what we do not agree and do not accept. The U.S. president said that silence is complicity.
The G7 is not a club which is hostile to China. It is an international competitor from whom we expect the full respect of all the rules we collectively and voluntarily submitted ourselves to.
And you're looking at live pictures from Brussels, where NATO leaders are meeting. This will be the first summit with Joe Biden as president. While Russia is likely to be top of the agenda, with Secretary General Stoltenberg saying this morning that relations with Moscow are at their lowest point since the Cold War. Now, in the past few minutes, we've also learned that leaders will declare China's ambitions a systemic challenge. Well, joining us now is David O'Sullivan. He's a former EU ambassador to the U.S. Ambassador O'Sullivan, thank you so much for joining us on Bloomberg. Ambassador, when you look at the G7 and actually what this means as a premise for NATO, it does mean, it felt like America was back to what we were used to pre-President Trump, but actually tensions still remain.
Well, I think that the G7 was the first step of President Biden demonstrating very visibly his recommitment to the multilateral institutions, such as the G7, such as NATO, such as the EU, whom we meet with tomorrow, and his willingness and openness to work with allies to engage on the big issues of COVID, climate, and China, as people have said. And I think in that sense, the meeting was a great success. Of course, there are divergences. There are even just those clips you showed of the different leaders describing dealing with China. There are some nuances to be detected there. But I think the most important takeaway is indeed a renewed sense of commitment amongst the allies to try and address these different issues together.
Ambassador, what exactly are you expecting from NATO? So if you look at the G7, it seemed that there was a pretty united front in how to deal with China. Will they be even tougher on Russia?
Well, I think, the big message is that the U.S. is back, fully committed to NATO. Let's be very honest. President Trump's mandate left people wondering whether you could count on the U.S. in NATO. President Biden is here to emphasize that we can, and that this is going to be a huge boost for the alliance. And yes, I think they will address the issue of Russia, especially in view of President Putin's meeting with Biden's meeting with President Putin on Wednesday, and they will also address, I think, China, and they will address the future development of NATO strategy towards the 2030 objective. And I'm sure they will also talk about the issue of spending and defense spending and whether Europeans do enough, which I think President Biden will still pass the same message as President Trump. We need you to do more.
But Ambassador, what comes after President Biden? So I know it's early days, given he's only become president in January. But do people back in the U.S. watch his every move with allies, watch his every move with China, to then decide whether they want Trump back or not?
Well, I think it's clear that the political situation in the U.S. is very finely balanced. Let's be honest. President Biden won, but he did not. President Trump also did very. Sorry. Yes. So the situation in the United States is very finely balanced. And we could see a change in 2022 in the midterms, or even in 2024. I think the voters of America, honestly, will be looking more to how the president manages domestic issues, their day-to-day bread and butter issues. But the fact that he is on the world stage, reasserting American leadership, reasserting the alliances, will, I think, add to his image and his domestic strength in the U.S. But he will have to demonstrate that all of this ends up with better outcomes for the American middle class than would be the case otherwise. And that's the key task he has going into the midterms and indeed into the presidential in 2024.
Ambassador, given what we've seen from Russia and Vladimir Putin over the last 5 to 6 years, how should President Biden deal with Russia when they meet, the two presidents meet in Geneva on Wednesday?
Well, it's going to be a difficult meeting, I imagine. President Biden says he wants a stable and predictable relationship. I'm not sure that President Putin does stability or predictability. I think he delights in throwing people off course. And there will be quite a lot of contentious issues, whether that's the human rights or allegations of Russian interference in domestic American politics. So both men are going to have to navigate the differences and try somehow to establish a relationship that will enable them to work together in the coming years. So it's a challenging meeting for President Biden. He'll have to calibrate it very carefully, but he will go to Moscow or to Geneva with a very strong backing from the allies in the G7, in the NATO meetings today, and in meetings with the EU tomorrow. So the choreography of this trip has been very carefully planned, and I'm sure he has a good idea of how he wants to handle the meeting. But it won't be easy because President Putin is a formidable political operator, as we know, and he will have his own agenda.
Ambassador, thanks so much. Ambassador David O'Sullivan there, the former EU ambassador to the U.S. Now, the UK Prime Minister Boris Johnson is set to delay his plan to lift England's coronavirus restrictions on June the 21st. This is because of a surge in the Delta variant first identified in India. Instead, officials expect the Prime Minister to announce a delay of up to 4 weeks when he announces his decision this evening. But there may be some relaxations of restrictions on weddings and major sporting events. Now, at a press conference on Sunday, Johnson said he hadn't yet decided whether to lift social distancing rules.
We're continuing to look at the data. No final decision has been taken, and the right time to fill everybody in on what we're going to do with step 4, with June the 21st, is tomorrow, as I've said, and that's when we'll be putting out the whole package of information so that everybody can see it.
Well, joining us now is Alex Morales, our UK government reporter. Alex, always great to speak to you on this program. So what relaxations are actually planned for June 21st under the government's roadmap, and can we expect them to go ahead?
Well, Francine, as you heard the Prime Minister said, he said that's stage 4 of the UK's plan. So we've already had 3 steps of the roadmap, and they've all run on schedule. Most things are reopened, but there's a number of businesses that are still closed. Foremost amongst them, nightclubs have been closed for 15 months, and they're due to open as things stand on June the 21st. The restrictions on the number of guests at weddings is due to be dropped. So at present, you can only have 30 people at a wedding, but the plan would be for anyone to have, unlimited guests at their weddings if they wanted to. And restrictions on the audiences at theatres, concerts, and sports matches would also be dropped. Along with that, you've also got the guidance to work from home. These are all all the final things that are left in place. The government had hoped to drop all social distancing whatsoever on June the 21st, and it looks like now they won't be able to do that. This 4th step will be the one that slips, even after the other 3 have gone ahead on time.
Alex, what are the implications for the Prime Minister of a delay? How much pushback is he actually getting into the House of Commons?
Well, he seems to have his ministers on board, but there is a sort of swathe of backbenchers from his own Conservative Party who have been reluctant to approve restrictions at many of the past stages, and they've dubbed June the 21st Freedom Day, and for them it's sort of become totemic. So he's got a lot of pushback from his backbenchers. Whether they have the numbers to thwart any attempt to delay, we'll have to see. It's important to note that the regulations that the government has expire on June the 30th. Even though the relaxation is planned for June the 21st, the legislation expires on June the 30th. So it looks like he'll probably have to get this through Parliament if he wants to go ahead with a longer delay than the end of the month.
Alex, do we actually understand why this is delayed? I mean, vaccinations are not doing badly at all in this country, in England. At the same time, it seems that people are respecting or could be respecting social distancing. So why can we not reopen on the 21st?
Well, I mean, you'll have seen the figures on caseloads ticking upwards. They've been moving upwards actually quite significantly in the past week or two. And that's all down to this Delta variant, which originated in India and has taken hold and is now the dominant strain in the UK. And I think data shows that it's 40 to 60% more transmissible than the previous dominant strain, which was the one that originated in Kent. So it's taking hold faster, and I think the main concerns from government are that whilst vaccination provides a degree of resistance to the virus, if you've only had one shot, that resistance is 30%. So you've still got significant vulnerability to the virus. Whereas if you have 2 shots, that rises to over 80%. So I think the government wants to have a chance to double shot all the most vulnerable groups. That's everyone over 50. And then you need another couple of weeks after that for the resistance to set in. So that seems to be what the approach they're taking is an ultra-cautious approach because they really don't want to reverse any unlocking steps that they take.
Alex, thank you so much. Alex Morales there, our UK government reporter. Now, taper talk returns. Traders get ready for this week's Fed meeting. Up next, we discuss with Ella Hoksha from Pictet Asset Management. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bitcoin has jumped after Elon Musk said Tesla would resume transactions with the cryptocurrency when mining is done with cleaner energy. Musk has whipsawed the price of Bitcoin and other digital tokens over the past few months, ever since announcing Tesla had bought $1.5 billion of Bitcoin in February. Apple will stop requiring customers to wear masks at some U.S. stores due to what it says is progress on the pandemic in America. Staff will keep wearing them. Apple was one of the very first companies to close its stores as the outbreak spread across the globe. And Blue Origin has generated $28 million by auctioning a seat to accompany founder Jeff Bezos on his ride into space next month. The company says the identity of the winner will not be revealed for a few weeks yet. Saturday's live auction followed weeks of online bidding with more than 7,000 submissions from 159 countries. All that money, Francine, for an 11-minute flight. And that's your Bloomberg Business Flash.
11 minutes, but what 11 minutes? I mean, Leanne, then this will make your dinner parties for years to come. I mean, imagine the stories, right? Probably worth it. Treasury yields have edged higher as investors prepare for a key Fed meeting later in the week. Now, the central bank is expected to reaffirm that its ultra-loose policy is appropriate and it's too soon to even think about tapering. Officials, though, could project interest rates at liftoff in 2023 amid faster economic growth and inflation. That's according to a Bloomberg survey of economists conducted last week. Well, joining us now is Ella Hoxha, a Pictet Asset Management Senior Investment Manager on the Global Bonds team. Ella, thank you so much for joining us today. What exactly is priced into bonds right now? It seems that all the taper talk that the markets were talking about could already be priced in.
Good morning. Yes, I think the market had excessively underpriced inflation risks starting the year, and then all the way until May, it actually went above and beyond pricing those particular risks as affirmed by the price action over the last couple of inflation prints effectively in the US. So with regards to this particular meeting, the market seems to be a lot more relaxed. It seems to be going along the line of the Fed rhetoric of late and thinking, at least for now, that we will probably be seeing a transitory type of inflation. So that's what's caused quite a bit of stability in rates, particularly in the US.
So, Ella, where do you see the best buy in bonds right now? If you look at globally, where do you want to be invested in?
Right. So we've favored the US in this particular repricing because that's where we've had quite a bit of excessive repricing take place. Australia seems to offer some value as well. But one of the key markets for us year to date particularly has been China. So Chinese local bonds have offered good value because they've also had very good diversifying properties relative to the rest of the rate space. So it's given a global bonds manager a bit of an escape, if you like, from the general repricing in core bond markets. China, we believe, also offers value in terms of tail risks, both on the sort of the more inflationary tail, but also on the more sort of a bit of a slowdown, given that we are likely to be facing more of a fiscal, I wouldn't call it a fiscal cliff, but a reduction in fiscal spending relative to the amounts of fiscal spending we saw last year. So that sort of tail risk for growth is also protected out of China, we believe, even better.
I mean, some of the other unknowns, I guess, whether, commodity prices turn into a super cycle or something like that. Then I know you also mentioned U.S. taxes. Is there anything else on the radar that could actually, change the trajectory of some of these bonds?
Well, for us, clearly the key focus is inflation. So we mentioned at the very start of the session that markets seem to have calmed down about that. But historically speaking, we have a really difficult time with inflation gauges. And that's been the case for central banks as well. So the predictability of inflation is a very difficult game to conduct. And so we like to think around the scenarios of, what can actually go wrong and try to protect the portfolios along those lines. So buy insurance, if you like. And for us right now, it's not our core case for certain, but we like to protect the tail risk of a potential inflation overshoot. So, we deem that scenario to be probably on the 15% probability range, but it is one that is absolutely worth protecting for global investors. And, on that round, things like the dollar, things like curve flattener positions, and also Chinese local bonds that I mentioned earlier are good hedges. So for us, that probably remains the most crucial component for rates more broadly into the rest of this year.
Ella, thank you so much. Ella Hoxha there, Pictet Asset Management Senior Investment Manager on the Global Bonds team. Now, coming up, after 12 straight years in power, Israel's parliament voted out Benjamin Netanyahu from his post of prime minister. We discuss the new coalition next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's the end of an era in Israel. Nationalist politician Naftali Bennett has been sworn in as prime minister overnight in Jerusalem.
I, Naftali
Bennett, son of the late Jim Yaakov and Mirna Leah, accept the obligations of Prime Minister to uphold the values of the State of Israel and its laws, to fulfill my duties and enact the decisions of the Knesset.
Well, that's after the Israeli parliament approved a new government, effectively ousting Benjamin Netanyahu as leader after a record 12 consecutive years. Now, there is quite a lot of geopolitics, of course, dominated over the weekend at the G7 over in Cornwall. Now, you're seeing live pictures from Brussels, where the Canadian Prime Minister Justin Trudeau is speaking at a NATO panel ahead of the leaders' meeting. This will be the first summit with Joe Biden as president. Of course, you can watch all of that on Live Go, L-I-V-E Go, on your Bloomberg terminal. A lot of the focus, of course, is on how some of the leaders will deal with Russia after a pretty strong rebuke or strong words against China over at the G7. It does seem that they have a united front. Again, we'll see whether that's true and whether it holds, but something that we need to keep a very close eye on. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin, Kailey Leinz out of New York. The focus, of course, is on what markets are also doing. So a lot of geopolitics, and we expect Prime Minister Boris Johnson to possibly delay the reopening. It was scheduled for June the 21st. We understand through insiders that actually these COVID rules could be delayed, or the COVID reopening could be delayed by as much as 4 weeks. Then, U.S. equity futures and stocks posting modest gains this Monday. Again, investors preparing for a key Federal Reserve meeting later in the week. I guess with so much anxiety out there on the markets about the Fed's plans to scale back monthly stimulus injections ebbing, we're seeing bulls coming back to actually try and put their dominance in place. So it's going to be a very exciting Federal Reserve meeting. We'll have, of course, a full roundup of the news on the markets. We look at bonds, currencies, and equities. Investors anticipating that the central bank will pretty much reaffirm the pace of bond purchases this week, even if it delivers projections for interest rate liftoff in 2023. And it's really these projections about liftoff in terms of interest rates that the markets will be watching out for. So we'll have plenty more. That's coming up shortly. This is Bloomberg.
What happened at this summit was that there was a colossal amount of work on subjects that had absolutely nothing to do with Brexit.
This is not a contest about who can do better in front of a press conference or try to embarrass each other. It's about making myself very clear.
And that's where all of us as a G7 and partners, are aligned in ensuring that we are consistent and united in our approach on these issues.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, it's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong. And our top stories today. The G7 summit wraps with COVID, China, and climate in focus. But despite a show of unity, hints of tensions and contradictions remain amongst leaders. Biden's European tour continues. The U.S. president meets with NATO, the EU, and President Putin this week. And Prime Minister Boris Johnson looks set to delay the UK's reopening amid a surge in cases of the Delta variant in England. Now, all of that, of course, will also be overshadowed by the huge importance of the Federal Reserve. It meets later this week, Kailey, and the focus is on when they'll maybe hint at when they could start tapering or moving interest rates. And that's definitely what the markets are watching.
Yeah, will they talk about talking about tapering, or will they just straight up talk about tapering? That's what we're waiting to see on Wednesday. And ahead of that, the market is really just holding its breath. I would note in the Asian session, volume was a bit light because we did have holidays in Australia, China, and Hong Kong. So keep in mind, if you check out Map Markets Go on the terminal, the moves you're seeing for those countries are from last week. Stocks that were open, though, include in Japan, where the Nikkei was higher by about 0.75%. And I wanted to point out Indian equities as well. The Sensex at one point was lower by about 0.5%. It has inched higher into positive territory by about 0.1%. And that is after we got inflation data out of India. Wholesale prices at the highest in 3 decades. So some of those pressures really are building. And after that data, the Indian rupee is weaker against the U.S. dollar by about 0.25%. The Japanese yen, meanwhile, is stronger. We're sitting right around 109.65. As for what the picture looks like here in the U.S., as we await the Fed on Wednesday, we are sitting at all-time highs. We closed at a record on the S&P 500 on Friday. We're just inching higher from that level this morning. Futures up about 4 points on S&P E-minis. We're steady in the Treasury market around 1.45% after that huge decline we saw in yield last week. It is a bond market that clearly is positioned for a continually dovish Fed. I would also note that oil is moving higher. We're up 1% on WTI, above $71 a barrel. And then in crypto, Bitcoin is coming down a bit, but it rallied 9% yesterday to right around that $39,000 level. You can thank Elon Musk making yet another pivot, saying that if mining becomes more focused on clean energy, Matt, then Tesla will allow transactions using the cryptocurrency once again.
Yeah, well, once again, Elon Musk, kind of the tail wagging the dog here. Yeah. But I'll leave crypto aside for now. Take a look at European markets. We are higher pretty much across the board. You can see the Republic of Ireland is down, but everyone else is gaining. The Stock 600, the broader index, is up right now. And the pound, I think, is very interesting to watch as we worry about delays to the reopening in the UK. Traders seem to have taken it out on the currency. So the pound sterling losing a little bit of ground against the dollar. Important to note that it's at a relatively high level at above $1.40. But then a couple of big movers here. Philips, I think a really important mover, a recall on a lot of the sleep apnea masks because of potentially toxic foam in those products. As a result, the stock hit almost 5%. And Ferrari also down after Goldman Sachs does a double downgrade directly from a buy to a sell, saying that CapEx is going to soar as the company makes a switch to electric vehicles. So this is a stock that, you know, Francine, has outperformed everybody for years, and all of a sudden this year the reckoning has come with ESG investors and Ferrari a little bit late to the game.
Yeah, so I know, Matt, you definitely watch the car makers more than anyone I know, certainly in financial news. And the focus is on, how you make these electric cars for these like super fast cars that cost like hundreds of thousands, even $500,000, but still having the engine that does that noise that people love.
They're going to give up the engine noise. That's the decision. If you look at exotic car makers like Rimac, there is no noise except for the whir of the electric motor, which itself is kind of cool but very quiet.
All right, you have to do a test drive for us, Matt, and report back.
Yes,
now
I
look
do.
at what's ahead this week. Today, Boris Johnson will announce whether or not to extend COVID restrictions in England. The NATO summit will also be held in Brussels. Tomorrow, the EU and the US hold a summit, which Joe Biden will attend. Wednesday, we'll get the latest Fed decision. News conference from Jay Powell. That's a big one for the markets. President Biden also meets Vladimir Putin in Geneva. Interesting to see the tone and body language amongst the two leaders. And then on Friday, we get a rate decision from the Bank of Japan. So there's quite a lot going on. And if you look at, of course, what the NATO leaders would focus on, it's probably on Russia after the G7 leaders over here in England at the weekend were pretty harsh on China, and they seem to have a united front. I don't know whether we have live pictures or not of NATO leaders. Just moments ago, Justin Trudeau was speaking in a panel. I think Boris Johnson has just arrived there with his iconic hair, really.
He's in a hair contest with Trudeau, Francine.
School. Yeah, I would argue not the same look. We will have plenty more from Boris Johnson to see whether the alliance holds or not. Now, the NATO summit, of course, follows this weekend's G summit. So let's get straight to Maria Tadeo in Brussels. Maria, if you look at the G7 meeting, they had a united front in how to deal with China. Will we have the same with NATO on how to deal with Russia?
Well, you know, Francine, that is the goal. And in fact, you know, you're very right to point out that there was a joint position to come out of the G7. There was a joint statement, 25 pages. And by itself, that is a highlight. I'm sure you remember during the Trump presidency, there was no joint communique simply because he would not sign on to the conclusions. Now, when it comes to NATO today, it really is about Russia, and it really is about taming some of the Russian interference that we're seeing in Eastern Europe. The Polish, the Ukrainians, the Lithuanians, very concerned about what they deemed has been very aggressive behavior from Russia in the past few months. And of course, this is coming just 2 days before he heads to Geneva to meet Putin. Now, the goal for the Americans here is to put a united front and to get to this meeting with leverage and kind of in a position to be able to say the Western powers and NATO are fully behind President Biden, and he's going to get tough on Putin.
Yeah, and Maria, we understand that UK Prime Minister Boris Johnson is discussing Russia right now as he arrives at that NATO summit. Other than the Russia issue, what else is going to be the focus for NATO over there in Brussels?
Look, I think it will a lot be about Russia, and Russia will take center stage. I think what is also key is to look at the fact that in every previous NATO summit under Trump, there was this fixation with the 2% spending. You know, that these countries, rich countries, need to pay more to this protection and this joint venture that is NATO. Now, it's interesting that this year the Americans, of course, they say they still want countries to pay into this, and NATO needs this. But it's not as confrontational as it was. I have to tell you, I haven't really heard a lot of chit-chat here about the 2%.
Maria, thanks so much. Maria Tadeo there in Brussels covering NATO for us. Boris Johnson speaking there at NATO, also looking set to announce later today, that he won't lift England's pandemic curbs on June 21st after a rapid surge in the Delta variant. Well, joining us now is Sam Fazeli, who leads pharmaceutical coverage for Bloomberg Intelligence. Sam, as always, thank you. So is the Delta variant not, can it get through vaccines, or is it that the UK population has not been vaccinated enough to warrant protection?
Good morning, Francine. You have both problems, in fact. So there's a whole host of people who have not. So 45% approximately of the UK adult population has not been vaccinated with 2 doses yet. And 1 dose isn't sufficient to really stop the infection. Maybe it reduces the severity of the disease a little bit, but certainly not the infection, and maybe at about 30% at best protection so far based on the data we've seen. So you have a problem with both of those issues that is causing a bit of a headache in the UK.
If they stretch the reopening 4 weeks later, does that give the UK enough time to give people enough second doses, to get enough people vaccinated to take care of this outbreak?
That is an excellent question, Matt. And I think that would mean that would probably be at about a 60, 70, well north of 60% of adults fully vaccinated in about 4 weeks' time. But the question is, if the decision about reopening, etc., is made based on the number of cases, that still leaves a large percentage of people who are going to be testing positive if we continue down that path.
All right, well, we will all await what that decision is. Thank you so much to Sam Fazeli of Bloomberg Intelligence. I do want to take a quick look at some stocks moving in pre-market trading here in the U.S. now. And of course, I have to begin with a meme stock because, yes, those are still some of the biggest news makers in the equity market. AMC, of course, one of the poster children. It rallied 15% on Friday, and those gains continue on this Monday morning. Shares up about 3% in early hours. I was also mentioning Elon Musk's pivot on Tesla and Bitcoin once again, saying they will allow transactions in the cryptocurrency once more clean energy is used for mining. And on the back of that, Bitcoin got a little lift. So too do Bitcoin-tied stocks in pre-market trading. MicroStrategy, one of them, up 4.5%. And Tesla, for its part, I would note, also is higher, not as large of a gain, but still that stock up about 0.8% before the bell, Francine.
Yeah, we have a lot going on, and Tesla never far from, of course, what we're looking at. Coming up next, Christian Keller, Barclays head of economics research. We'll talk to him about the Fed. Maybe he'll have a thing or two to say about Bitcoin and Tesla. And then a little bit later, Joyce Chang, JPMorgan chair of global research. This is Bloomberg.
This is Bloomberg Surveillance. I'm Matt Miller in Berlin, along with Kailey Leinz in New York and Francine Lacqua in London. Now, I have a chart here that I'm pretty excited about because it sets up the Fed this week. And really, the same can be said of most Western central banks. The risks around their decisions this week and in the coming weeks are really asymmetric because everybody seems to be on one side of the trade. We welcome our viewers on Bloomberg Radio every day at this hour. What we're looking at here on this chart is the drop in yields that we've seen 4 weeks now in a row, and last week was the biggest drop in yields we've seen in over a year. So people are piling in to treasuries even after the big CPI and other inflation prints that we've seen. And Christian Keller joins us right now from Barclays. He's their head of economics research. And Christian, why is it that everybody believes the Fed is going to hold true? Everybody believes central banks are going to hold this push against inflation.
First of all, I would say that most people are quite puzzled and have been quite puzzled about it. It's easy at the end of a week to rationalize things and why this has happened. And you say people have been piling into treasuries. It's probably also people getting squeezed out who had short positions. But what is fascinating is that in light of data coming in that tells us a lot about more bottlenecks and persistent supply side pressures and a CPI print in the US, it was 5% headline year on year. Surprising on the upside, markets actually took, at least yields in the US in a way went down below 1.5%. So I think what they're telling us is that with the message from the ECB last week and with the expected message from the Fed this week is that central banks, there's enough uncertainty for central banks to tell us, look, we will look through this for now. There are a lot of signs that this is transitory. Used cars will not continue to go up in price. And, markets by now say, look, if it's uncertain, if I won't be able to tell the outcomes of the US labor market in particular for another 6 months or so, it's difficult to bet against central banks at the core who told us that they will remain dovish and they will look through this and they firmly believe that this is transitory.
There was a big note out last week from David Folkerts-Landau and the team at Deutsche Bank. There was another note out from Andy Haldane saying, look, this is a serious spot we're in, the danger zone, you might say. Today, ECB Governor Holtzman came out and said they're not in a dangerous zone for inflation. But we haven't seen this kind of fiscal increase. We haven't seen this kind of monetary help, and especially in concert, right, since World War II. Isn't there going to be persistent inflation that has to come along with that?
Look, I agree with you that the threat probably is bigger than it has been for a while. And, I looked a little bit recently at what happened in the US in the 60s, right? Because there you also started off with very low inflation expectations and typically we remember the 70s with the oil price spikes, but actually things became unanchored in a way during the second part of the 60s already. Now, why are markets not reacting more? I think for two reasons. First, you say on the monetary side, I think that we have seen before. And you know, the new issue is here that it comes with a lot of fiscal support. But what I also read is the markets are no longer sure how much of that $4 trillion spending package that the US administration proposes will really come through. And I think there's now the feeling that maybe it will be a lot less. And if you believe that, then suddenly in 2022, you actually have some, I don't want to call it a fiscal cliff, but you'll have a significant reduction of the fiscal impulse. And if the same happens in Europe and elsewhere, I think markets believe that with growth already peaking probably now, going to be strong this year, but peaking in momentum terms. And then, you know, fiscal dropping off next year, regardless of the rhetoric. You know, they believe why should inflation then really be persistently higher against a target where the Fed has told us they want to actually overshoot 2% somewhat.
But Christian, how much of the inflation overshoot or certainly tapering is already priced into the markets?
But right now, you know, if you look at the break evens, all the way out to 30 years, they're relatively mildly pricing inflation. 10-year break evens, I think 2.3 or so. So I would say what they are pricing right now is almost exactly what the Fed would want. But what they're not pricing, I believe, is really something that is out of control, where the Fed suddenly does not have just a moderate overshoot, but gets something more. And I think the risk here is also that with the Fed policy and their determination to stay, dovish, is that we're going to see late hikes, but maybe more than the market is pricing now. So we believe markets are not priced for this upside surprise. Okay. We do believe that steepening in curves is probably what markets should positioning for.
So, Christian, will we see a move in the dots this week?
That's in a way next to the language around tapering the key issue. We think a few people, maybe two may move. You may get an exact split in the dots with regard to will they hike in 23 or not. The market, of course, the futures are pricing already a hike in early 23. So compared to the market, the Fed will stay dovish. But I could imagine that there'll be, two dots possibly moving a bit closer with regard to where they see the first hike.
Christian, thank you so much. Christian Keller, their head of economics research at Barclays, joining us this morning. Now, coming up a little bit later on G7 and NATO, we talk to a former British ambassador to the U.S. He's Peter Westmacott. We'll ask him how both allies should deal with Russia and China. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to the Bloomberg. First word news on President Biden's quest to enact his $4 trillion economic agenda enters a turbulent new phase today. The House comes back into session and Democrats are ramping up pressure on the Senate to produce a bipartisan compromise. Now, a key challenge is that the fast-track budget process that progressives want to use will only be available if all 50 in the Senate Democratic caucus agree to take that step. Iran is says it has reached a broad agreement with the U.S. over the lifting of sanctions on its industrial sectors, including energy. But the country is warning there is, quote, very little time left for world powers to revive a 2015 nuclear deal. The trade restrictions have all but prevented the Islamic Republic from exporting oil. Now, oil markets are keeping a close eye on the talks taking place in Vienna. And Benjamin Netanyahu's record run as Israeli prime minister has ended. Opposition parties united in a bid to end more than 2 years of political turmoil. Now, the country's parliament has cleared Jewish nationalist Naftali Bennett and centrist Yair Lapid to take over in a power-sharing arrangement, while Netanyahu is now vulnerable to pending graft charges. Now, passing a budget will top the new coalition's agenda. Finally, Bitcoin has jumped after Elon Musk said Tesla would resume transactions with the cryptocurrency when mining is done with cleaner energy. Musk has whipsawed the price of Bitcoin and other digital tokens in the past few months, ever since announcing Tesla had bought $1.5 billion of Bitcoin in February. I mean, I love the fact that actually he tweets and everything moves. What I don't really understand is that there's not an infinite, way of actually changing the way you mine Bitcoin, right, Matt? So it's unclear whether Bitcoin can become any cleaner.
I agree 100%. Of course, it could become cleaner, but what's the metric? Like, who's out there measuring the way every miner is conducting his or her business? I don't get why that statement is enough to move this asset, but there you go.
It's 2021. Do we have to have a real reason why Elon Musk on Twitter can move Bitcoin to such a degree, Matt? But to your point, there are estimates out there. Some people say that about 39% of mining is powered by renewable sources at this point. Of course, Elon Musk said in that tweet yesterday he wants it to get up to 50%. So I don't know what metrics Elon Musk is looking at, but it's just a question of when exactly we're going to get there and Tesla's going to start accepting Bitcoin for transactions again, Francine.
Yeah, I just love the story. It's just like the story that keeps on giving. And unclear where Bitcoin ends up, but our resident expert Matt Miller is very excited. Coming up, maybe we'll talk Bitcoin as well. Joyce Chang, she'll have a thing or two to say about Bitcoin, as do you, Matt.
I just don't love the story. I love the asset class. I love cryptos, the space, the community, but I don't love the story of Elon Musk moving it up or down with a tweet. It hurts me. Right here, Francine.
We'll see.
For those on radio,
Joyce
Matt is
Chang
pointing to his heart.
This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, Matt Miller in Berlin, and Kailey Leinz in New York. A lot going on, Matt, in the world of geopolitics. Of course, leaders meet in Brussels today for NATO, US-EU meeting tomorrow. Then, the big one, Vladimir Putin meeting with Joe Biden in Geneva. But actually, moving the markets will be the Fed.
Yeah, the Fed for sure, and we're focused on that. But I think the geopolitics has been so exciting over the past weekend, Francine. It doesn't look like, Biden isn't going to be able to stop Nord Stream 2. He didn't get the kind of opposition that he wanted from the G7 on China. And the U.S. was basically the only country to make big vaccine donations. Biden promised $500 million, and then the other 6 of the G7 countries came up with 113 million doses. So he's doing his best for sure.
Yeah, he certainly is. How's that all playing out in the markets, Kailey?
Well, Francine, I'm going to say something I feel like I've said a lot recently, and that is that I'm looking at record highs on both sides of the Atlantic. Granted, once again, the moves aren't massive. The Stock 600 is at an all-time high, but off the highs of the session and only up about 0.2%. Here in the U.S., S&P 500 futures are higher by about 3 points or so after closing at a record on Friday. And in the Treasury market, we're steady right around that 1.45% level. We're hovering around the lowest levels that we've seen in about 3 months ahead of that Wednesday Fed decision. The question is, do we get a hawkish surprise that maybe moves some things in the bond market? We will all have to wait 2 days to have that answer. And then, of course, we've been talking about crypto all hour, and Elon Musk moving the market once again with a tweet about Tesla accepting Bitcoin for transactions once there's a little bit more clean energy involved in mining. So Bitcoin's hanging out right around that $39,000 level. No surprise, the fact that Bitcoin moved higher by about 9% yesterday before stocks were trading here in the U.S. They're playing a bit of catch up in pre-market trading. Some stocks tied to cryptocurrencies, including Marathon Digital, which is a Bitcoin miner. It's higher by 7.5%. You have Riot Blockchain moving to the upside as well. Then, of course, we have a little bit of a lift for some of those meme stocks. AMC is higher by 2.25%. And then, Matt, you mentioned this one, so I threw it on the board just for you. The ADRs of Ferrari down about 3% after that double downgrade at Goldman Sachs.
I will tell you something very interesting. Usually they would be ADRs, but Ferrari actually listed on the New York Stock Exchange. I know that because I was there on the floor with Piero Ferrari and Johnny Elkann. It was one of the more exciting days of my life. Now, speaking of exciting, Francine, I have a chart of European bank stocks. And I'll tell our listeners on Bloomberg Radio what I'm showing you. There were so many to choose from because the excitement around EU bank stocks has been building over the past couple of weeks. This shows the gap between the U.S. bank stocks performance in blue. Note, they've done incredibly well, and European bank stocks in white. Now, when you look at it like this, it doesn't look like European bank stocks are much of a success story. But trust me, on their own, they have rallied 76% from the bottom. They're almost back to pre-pandemic levels. People have a lot more faith in them, and they're still at lower valuations than they were in 2019. So there's a lot to talk about around EU bank stocks.
I love that chart, actually. I pushed it out on social media a little bit earlier, Matt. One of my favorite charts, especially seeing the rally that the EU banks had last year. Now, talking about the banks, about valuations, but also in general about the markets. From New York is Joyce Chang, Chair of Global Research at JPMorgan. Joyce, thank you so much for joining us. I know Matt wants to go to the banks in a second, but overall, when you look at what's been discussed at the G7, NATO, our relationship with China and Russia, does that change any of your forecast, or is it just geopolitics that for the moment doesn't impact supply chains, doesn't impact trade?
I think the U.S. is putting out a very strong message that they want an alliance of the democracies against the autocracies. But the rest of the world is basically saying, you know, look, I mean, we need to balance all of our interests, and we're still coming out of this recovery. So I don't actually think that it changes the story that much. I mean, the story is still the U.S. recovery marches on, and that's going to be very strong, you know, through the third quarter of the year. But the rest of the world, Europe is also going to come out of this. So we talked about European bank stocks, but we see in the third quarter of the year, European growth coming back nearly 15% in the third quarter. So the U.S. has started out ahead, but Europe is going to catch up. And I agree that the bank stocks still look attractive here. We also think the energy sector looks attractive here.
So, Joyce, overall, when does the Fed actually start tapering? Are they 6 months to a year ahead of the ECB?
I think that this is probably, you know, early next year where you begin to really see more action about this. The market has now accommodated, you know, the talk, and that's sort of in the marketplace. And I think Treasury yields should move up from here. I mean, we've been surprised by how subdued they are. So I would expect that move to occur, and that you're seeing more of the actual tapering talk, you know, early next year. But I think, you know, you've seen the market go through a number of different phases. First, there was the anticipation of the taper talk, then the actual, you know, the actuality of it actually had Treasury yields coming down. But we're surprised by where break-evens are and where Treasuries are at right now. And we do think that this is a point where U.S. Treasury yields are set to rise in the next couple of weeks and months.
It's like that wherever you look, Joyce. This morning, I spent some time on the terminal going around to different regions, and yields have come down everywhere. Just a couple of weeks ago, we were looking at almost negative 10 basis points on bunds, and now we're back down at negative 26. The same is true if you look at gilts. Why is it that the market all of a sudden believes the major central banks are going to look through this inflation?
Well, I think some of this for U.S. Treasury, at least, has been positioning. I mean, we think there's probably another 30 basis points that you could actually see this move. And you had such front-loaded moves earlier in the year. But from the ECB, you've had the message of, you know, just keeping with the asset purchases. So I think that, you know, there's a sense that, you know, still there's going to be more caution coming from the ECB side. But on 10-year yields, I mean, we're still very comfortable that you're going to see this approaching sort of the 2% mark by the end of the year. So I have been surprised by just, you know, how the response has been, particularly given the inflation prints that we've seen, and that we're likely to see inflation elevated for the next couple of months.
So is the biggest downside risk potentially a hawkish Fed surprise?
You know, I think that the Fed, you know, messaging actually has been pretty consistent here. You know, they have been, you know, talking about tapering, and there's talk, but there's not going to be, you know, much action on that. Now, we've moved up our call on when we expect the Fed to move, you know, to 2023, but that's still, you know, quite a long time away. So I think the market has already priced in quite a lot. What I would expect is that you would see Treasuries move from the current levels that we're at. And I think the inflation is still going to remain on everyone's mind as well, but I think you do see a peak coming in the next few months. You know, travel is going to continue to pick up. But I think U.S. equities here are going to continue to perform well, with Europe catching up over the next few months. So still strong outlook for the equity markets.
Joyce, I mean, the equity market in Europe, because it's been undersold a little bit, or actually do you see value in the US?
I mean, we're looking to 15 to 17% upside and for value and cyclical leadership here. We really do prefer the domestics over the exporters to periphery to the core, but we do see energy sector across the board still having value here. We have oil going to $80 later in the year, and at $70 per barrel, this is the highest levels we've seen since May of 2019. And we still have this recovery online because the travel will pick up from this period through August, through the summer months.
Joyce, when you look at some of the things looking for the summer, are we underestimating the impact that some of these variants could have? I know, especially in the U.S., there's a feeling of reopening, that actually everything's fine, we're on a strong trajectory for the recovery, but then you look at the U.K. and they're thinking about delaying the full recovery, and it's the full reopening, and it's unclear why that is.
I think the vaccination rates, at least those with one dose, have gone up quite a bit in the U.S. and Europe as well. I think the Europe is being cautious, just given the experience we've had. But we are beginning to see that just the correlation between the vaccinations and the mobility in the developed countries. I do see that reopening momentum is still there. The travel sector is going to benefit. Value, cyclical leadership. I mean, we would still keep with those themes through the summer months. And I also do think that energy prices will continue to be strong, just given the demand factors that are in place right now.
I mean, given the demand, given the pent-up savings we hear so much about, Joyce, what happens if inflation stays at, relatively high levels, possibly uncomfortable levels? What do you buy to hedge?
Well, I still think that commodities are probably still the best hedge that you can do here. That's to me the one that's it's traditional. It's not necessarily the boldest answer out there, but I think commodities are the best way to hedge. One thing that we've also seen is that the bond equity correlation has turned positive again, and that could increase the demand for commodities as a diversification benefit as well as a hedge against inflation. So I would stick with commodities here.
Joyce, I'm not sure if Bitcoin is a commodity or if it is a currency, but I'm curious how you're viewing it.
Well, I think for sure the volatility we've seen is a setback to the institutionalization of Bitcoin. There's a lot of talk about whether this could be a substitute for gold, but when we see the volatility that has been in place, I do think that just institutionalization of this asset class is going to take a lot longer. Now, we have a lot of fair value models, as do others, but we've looked at the lowest cost mining, and then we've really looked at what would happen if it could take the place of gold. And you have a very, very wide range here. So I think that institutionalization of Bitcoin is going to come much more into question, just given the magnitude of the volatility and the moves that we've seen over the last few weeks.
So, Joyce, when could realistically, in terms of timeline, I mean, could it ever actually, replace or at least try and have an impact like gold has, or is it just disconnected at the moment?
I think it's disconnected at the moment, Francine, because when you take a look at the volatility, I mean, you've had like 4 to 6 times the volatility of gold. So talking about a replacement is, I think, very difficult to envision for institutional investors. And then you have the ESG concerns on top of that. I mean, looking at the inflows, we've seen about, 14 billion of inflows since last fall, but you've had the market cap go up as much as $800 billion over that same period of amount of inflows. So I think the concerns about asset valuation, some of the ESG concerns as well on where the mining takes place, and the volatility all mean that this is something that will continue to have a great deal of interest, but the speculative aspects of it have become very clear over the last few weeks.
Joyce, thank you so much. Joyce Chang there, Chair of Global Research at JPMorgan. Now, coming up, Peter Westmacott, former British ambassador to the U.S. We'll talk about the G7. We'll, of course, talk to NATO, about NATO, and we'll talk about the Geneva summit between Biden and Putin. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, all eyes on Cornwall in the southwest of England over the weekend as leaders from the G7 and European Union met for the first time in 2 years. Now, it comes at a crucial geopolitical moment for the Western allies, marking Biden's first meeting and Angela Merkel's last, with divisive issues like Brexit and China dominating the agenda. Well, joining us now is Peter Westmacott, former UK ambassador to the US, France and Turkey. He's the author also of the recently published book, They Call It Diplomacy, 40 Years of Representing Britain Abroad. And he joins us today. Peter Westmacott, thank you for joining us. Ambassador, when you look at some of the things that we saw at the G7, this was a united front, but differences remain on how tough they were on China, on how to deal with the vaccines, and on Brexit. Is it more of a united front for the cameras than it is behind closed doors?
Well, morning. Thanks for having me on. I think you're right that there was a nice show of unity, and the second day at least the sun shone, and so we had blue seas and blue sky in Cornwall, which is very nice for the tourist industry there. The communique showed that there was quite a high level of agreement on a lot of things, not perhaps as many vaccines being donated to poorer countries as we would have liked, and perhaps not yet flesh on the bones of a united approach to dealing with the rise of China. Perhaps that would have been a bit much to hope for. Behind the scenes also, there was, in fact, not entirely behind the scenes, also front of stage, there was a bit of a scrap between Boris Johnson and his European colleagues on the whole business of Brexit and the way in which implementing Britain's departure from the European Union with the Northern Ireland protocol to the withdrawal agreement has in fact complicated trading arrangements between Great Britain and the island of Ireland. And that was quite a squabble because after all, there were 5 different European leaders who were there in Cornwall, and all of them with an EU perspective on that, and a president in the form of Joe Biden. Yep. First outing to the G7, strong Irish-American links, strong Irish roots, and a great believer in the importance of peace and stability in the Good Friday Agreement in Northern Ireland, and actually no fan of Brexit anyway, as he's made clear, and as he seemed to make pretty clear when he was speaking to the media at his bilateral with President Macron of France. So you're right, plenty of things behind they weren't on the same page.
Yeah, I mean, given, and we see beautiful pictures for our wonderful listeners on radio, also of the Queen with Boris Johnson flanked by the G7 leaders. Ambassador, when you look at the most important meeting this week, it's probably Putin-Biden. What kind of tone can we expect from them?
I think the United States President Biden has set out a certain amount of what he expects and doesn't expect from that meeting. And so also has President Putin. He's given an interview as well, as we know. I think the expectations seems to me to be modest. That is to say, the relationship is not in good shape. Both sides admit that. President Biden has said that he wants to get the measure of where President Putin's coming from, not really get the measure of the man. He knows him. They've been around the block, both of these two, for a long time. But I think that President Biden will want to be pretty firm on what he regards as unacceptably bad behavior from Russia, whether it's cyber warfare, whether it's interference in democracy, whether it's supporting state-sponsored hijacking of civilian airliners, or whether it's about murdering political opponents or journalists who ask too many questions. There's all that out there. And that will be important. And I think that the president will want to find a way of dealing with Russia, but he will not pull his punches on those difficult issues.
Ambassador, with that laundry list of behaviors from President Putin, is there still so much support other than Germany for this Nord Stream 2 pipeline? I mean, this country, the largest economy in Europe, essentially wants to help fund or will be helping to fund those activities, even if they don't want to.
Outside Germany, I honestly don't know, Matt, whether this is something that people feel very strongly about. What I have sensed is that from the Washington perspective, although Secretary Blinken and the president and others have made pretty clear that they don't think this is a good idea, I sense that they're backing off a bit in that the project is almost complete, that Germany doesn't seem willing to back down, that this is not something the United States would like to do because it essentially supports the Russian economy, but that maybe there are other ways in which like-minded countries can work together on addressing the problems of Russia.
Thank you so much, Ambassador Peter Westmacott, their former UK ambassador to the US, France, and Turkey. Now, coming up, back to work. Goldman Sachs employees set to return to the office, and we're live at the bank's headquarters in New York. That's coming up next, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, Wall Street is returning to the office, and U.S. Goldman Sachs employees are set to return to the bank's Lower Manhattan Tower today, while the target date for the U.K. staff is June 21st. Sonali Basak, Bloomberg Wall Street reporter, joins us now with more from West Street on a very rainy Manhattan morning. Sonali, what's the scene like on the ground?
Yeah, people are just starting to trickle in, but I've been told that Goldman Sachs expects a long line as employees, and this is my public service announcement, have not yet downloaded the app, that they need to attest that they've had their vaccinations or have not traveled to a place with a lot of COVID or have been exposed to people with COVID. Kailey, it's an emotional day. This is not just in New York. This is across the United States that Goldman Sachs is planning to bring back thousands of employees. And honestly, it's a big day that a lot of employers will be watching. As we know, they're a very early employer to be doing such a thing. And in New York, they're really one of the first.
I'm sure that a lot of employees, Sonali, are happy to come back. If they've been working from home for a long time, it's a great change of pace. But will they want to come to the office 5 days a week? Is that what's expected of them?
It's really interesting. They're asked to come back. Goldman Sachs has said that, they're really an in-office. And by the way, many of the banks say, they're not in the business of FaceTime. They work better together. With that said, there are exceptions, including for today. It's not everyone that's coming back. It's on a team-by-team basis. Some teams, I've been told, have been asked to bring some people back, but not everybody, depending on the space they have in that team. We know that this building has been at about 30% occupancy until this point. We'll know at the end of today what the occupancy will end up looking like ultimately. And we know that employees who are asking for flexibility for childcare reasons or other reasons, they are being given that flexibility.
Sonali, thanks so much. Sonali Basak there in front of GS headquarters in Manhattan, and she'll be there for us throughout the day. Now look at what else we're watching today. And Kailey, you're watching crypto.
And Elon Musk's Twitter feed, Francine, because the two things are not mutually exclusive. Of course, Elon Musk moved Bitcoin last night with a tweet that he's going to allow transactions with Bitcoin for Tesla when mining becomes a little bit more clean energy focused. So we're hanging right around that $39,000 level on Bitcoin. So I'll be watching that throughout the day, Matt.
I am watching NATO, and I'd say it's so fascinating sitting here in Berlin, the former heart of the Cold War, to watch this group now a lot more loosely aligned than it once was. Here you see Chancellor Angela Merkel coming into the NATO summit. Some hailed her formerly as the head of the free world. She really ruled the G20 summit in Hamburg. That may change now that President Biden is back, so it's going to be interesting to get the tone of this confab.
Matt, what I'm watching is, of course, Boris Johnson, the Prime Minister of the UK, set to delay the full reopening of the UK. It was meant to be for June 21st. This could be delayed by up to 4 weeks. This is because of the resurgence of the Delta variant, which has really forced the team of Boris Johnson to rethink their blueprint for ending the social distancing rules. Again, it just goes to concerns that this rapid rise in COVID cases could put hospitals under strain. And so the question is the vaccination program with the 12-week delay not the right strategy for the UK? So we'll talk about that throughout the day. Also coming up, more on the Fed. This is Bloomberg.